March just started and the economy is already flashing major warning signs. The Dow just had its worst day of all of 2025, dropping over 649 points in a single session.
Stock market closed out the week with the worst day of the year so far.
The Dow Jones falling a staggering 649 points.
But this isn't just for stocks. Bond prices are rising and treasury yields are falling.
U.S. Treasury yields have been on a tear as of late.
U.S. Treasury bonds are trading about 50% below their all-time high in 2020.
Meaning investors are pulling out of risky assets and running for cover. Billionaire investor and CEO of JP Chase, America's largest bank, issued a warning, saying the U.S. could be headed towards an economic crisis. His words, an economic heart attack.
Jamie Dimon, the CEO of one of the largest global banks in JP Morgan, has recently issued a number of alarming warnings around the economy.
And billionaires at his level aren't people who panic and make decisions out of emotion. They move strategically.
I'm not going to win by being scared. I'm going to win by working hard and doing the thing that we need to do.
And when the people managing billions of dollars of capital start looking for safety, it usually means they know something the rest of us don't. And at that same time, Americans are being squeezed from every single direction. And speaking of record highs, look at consumer debt.
Ocean of debt is getting deeper. Total household debt rose in the third quarter by $147 billion.
And on top of that, tariffs and other inflationary pressures are about to take hold of the U.S. economy. So what does Jamie Dimon see coming? What's happening to the economy right now? And most importantly, what should you and I do? Let me know in the comments, do you think we're headed towards a market crash or just another dip? Today's video is sponsored by my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have a goal of taking advantage of what I believe is going to be the greatest wealth building opportunity in American history, maybe you want to invest in distressed real estate or get a business loan, make sure your credit score is in line with these goals. So if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items in your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free call for tomorrow. Now back to the video. A single bad trading day isn't anything we should panic about. But this is different. The Dow plunged over 649 points. The S&P fell over 1.7%. The NASDAQ lost over 2.6%.
U.S. stocks tumbled on Monday, Dow dropping almost 1.5%. The S&P 500 shedding more than 1.75%, and the NASDAQ spiraling more than 2.6%.
That means in just hours, the market erased billions of dollars of shareholder value. But here's what makes this even more concerning. Investors weren't selling just stocks. They were moving into bonds at a rapid pace. Bond prices surged and yields went lower.
U.S. government bond yields are a barometer for the economy.
Bond yields affect everything from the cost of a mortgage to the cost of borrowing for businesses.
That's a major sign that investors are choosing safety over profit. And this is important because this same pattern happened just before the great financial crisis in 2008, before the recession and before the dot-com bubble burst. Every single time, the billionaires, the wealthy investors, they moved in silence and they went into safety. And they did it before the masses realized exactly what was coming next.
A string of high-profile CEOs, founders, and heirs are selling a massive amount of stocks at their own companies lately.
Warren Buffett, the best investor that has ever lived, is currently selling massive chunks of his portfolio.
Do you think this time is just a regular market correction? Look at Warren Buffett sitting in almost $350 billion in cash.
Warren Buffett today has more cash as a percent than he had before the 2007 financial crisis.
Berkshire Hathaway's cash pile here. The cash pile has reached a record $325.2 billion in the third quarter.
Are they all planning for something much bigger? Drop your thoughts below. While billionaires are protecting their money, the average American can barely keep up. 1 out of 5 Americans, 20% of all spenders, are now engaged in doom spending. They're buying things because they think the price today is going to be a lot cheaper than the price tomorrow. And here's the kicker. Credit card debt is now at $1.2 trillion.
More than $1 trillion. That's how much it would take to get Americans out of credit card debt right now in this country.
Cost of living increases due to inflation, paychecks not keeping up, and interest rates rising on credit card balances.
While interest rates remain high, credit card companies continue to push them up, and retail credit cards, it's even worse. You're looking at over 30% interest on many of these cards.
So many folks are drowning under the weight of credit card debt.
But what choice do most Americans have? They have to borrow to survive. But the biggest warning sign, more homeowners are falling behind on their mortgage payments. FHA loan delinquencies just hit 11%. At the end of 2024, there were 7.81 million FHA home loans. Over 780,000 people are currently behind on these payments. For context, the entire state of Maine has 751,000 housing units. There's more people delinquent on FHA home loans right now than the entire state of Maine. Think about how big of a problem that has been swept under the rug over the last couple of years really is. And now this is all coming at one time. Simply isn't sustainable. You can't have a strong economy when most people can't afford to live in it.
Buy now, pay later options when purchasing everyday items.
U.S. consumers are increasingly using the installment loans to pay for everyday items, including groceries.
If you want to know what's really coming, pay attention to central banks. Pay attention to the billionaires. Pay attention to where the smart money is flowing and where that money is moving. It's moving into safety. They all suggest that they know something that we don't. Jamie Dimon, the CEO of JP Chase, said that the government is inefficient, and he's getting behind Elon Musk and Trump, saying that we need to cut the waste. Elon's warning that the government is wasting $2 trillion and is issuing massive layoffs.
Well, I think we can do at least $2 trillion.
America is also going bankrupt extremely quickly.
And now, inflation is likely going to go higher through all of the new tariffs that are now taking hold of the U.S. economy.
Fruit and vegetables to electronics, clothing, toys, a lot of those things that we get from China. You could actually see prices increase within the next few weeks.
Steve Cohen, one of the world's wealthiest, and some would say one of the most powerful billionaires inside of private equity and hedge funds, just went bearish on the U.S. economy because of tariffs and slow growth. These people, they don't panic. They move early, they move quietly, and they're all shifting their strategies right now. Last couple of years, it was sell, selling as many stocks as they could, hundreds of millions or billions of dollars worth of stocks, and now it's all safeguarding that wealth. The big question is, how big of an impact will tariffs have on our economy? Will everything just jump overnight? Will gas prices go up 20 to 40 cents per gallon? If so, imagine what that will mean for everything that is being shipped and moved around our economy through trucks.
Oil is a big one. There's a 10% tariff that would be going into effect on Canadian energy, and we get a lot of our crude oil from them. So think about the price of gas that you're going to pay at the pump.
Everything will be going up because of it. Fruits and vegetables, expect increases around 10 to 15% at minimum.
The tariffs will be applied to a range of American products, including food like dairy, poultry, fruit, coffee and tea, spices and bread, and goods like perfume, makeup, soap, and clothing.
Home prices, if you thought they were expensive now, get ready. Coming soon, the only people that will be selling their homes will be the people that have no choice. They're behind on their mortgage. Most Americans, they have a mortgage at around 5%. Why would someone in this economy that we're walking into want to sell their property with a 5% mortgage and move into a 7% mortgage? They wouldn't. It's really going to be a game of survival of the fittest in the U.S. housing market. But the big question will be, how many people can survive it? They sure won't be able to afford new homes for purchase, as we are going to likely see aluminum and tariff. We will see many of the new home construction projects turn to for rent only communities. And when they're now projecting, National Association of Home Builders, that home prices will have to go up by $22,000 to alleviate the pressure with aluminum and steel over the tariffs, you just imagine what that's going to mean. Private equity is likely going to be stepping in, acquiring a lot of these communities, turning them for rent. We're going to likely see a major shift of wealth in the coming 24 to 36 months that billionaires are getting ready for. So the big question, what should you do right now to prepare for this? Well, I believe cash flow, having revenue coming in, stable income is key. Keeping your expenses manageable, getting out of high interest rate credit card debt is paramount. No one can get rich paying someone else 20 or 30% interest on a credit card. Just not possible. If you have credit card debt,
Cause I have $30,000 in credit card debt.
When they call, I tell them I can't pay it back yet.
Look into a 0% APR balance transfer credit card. You can transfer this money in most cases for free, or maybe there might be a one-time fee of $100, $200. But if you're paying the minimum payments, if you use a credit card interest rate calculator and you type in how much you're paying, your balance, what the interest rate is, your minimums, you'll realize that, a $10,000, $15,000 balance, it might be decades to get debt free. So being strategic and being aware of your own financial situation now is key. It's paramount. Because if you do this and you could brace for higher cost and you could invest when most people have no choice but to sell, financially you're going to do very, very well. I believe we're going to be walking into hard times in 2025 and 2026, and I'm building out my entire investment plan around this. I think we're going to see some really challenging times and a once-in-a-lifetime opportunity to build wealth. So smart and savvy people are really focused right now on growing wealth. Most other people are kind of bracing for impact. Choose wealth. Choose wealth. You don't need to be a millionaire. Maybe you buy a house, you have one home that's paid off, you have fixed living costs, and you're able to save money. That is going to be extremely, extremely valuable. If you have late payments, medical bills, charge-offs, or closures, anything on your credit report, now is the time to square it away so you can position yourself for funding. If you are thinking about investing in distressed real estate, getting a business loan, you're thinking about passing some type of credit check to get a loan, we'd love to help you get in front of that at greatcreditfast.com. You can click the link in the description just below this video, schedule a free call. Catch you next video.